Hi, Michael Glennon from Glennon Capital. Today I want to give a bit of an update on Domino's Pizzas, which we don't own. It's a top 100 stock now, but we did own for a long period of time. Some of our clients still own it and have asked me what they thought of it. Given that the share price has pulled back from high 70s, just under $80, it's currently about $52. One of the reasons we sold out, other than the fact that it had gone into the top 100 and was out of our mandate, was because the company had quite significant PE expansion. So we bought the shares back in 2012. The market cap back then was about 500 million. It traded on a PE of 18 times, which seemed expensive at the time. But the market cap now is actually 5 billion, and it trades on a PE of about 32 times. So it's had significant PE rating, and it's a significant larger company. And the CEO has done an excellent job of growing that business, especially with the push to offshore. But for us now, things have changed. It's starting to, from my perspective anyway, it's starting to lose a bit of its appeal as an investment, because it gets incrementally harder and harder to continue to deliver that strong EPS growth. At the time we bought the shares back in 2012, it had about, for the last 4 or 5 years, it had had compound annual growth in earnings of about 25%, which was phenomenal. And this is one of the attractions that we have with small companies, that you can get a company that's got a $500 million market cap that over a fair period of time, with good management, can grow to something like what Domino's is now, being a $5 billion company. However, we are starting to see some sort of tension within the business. You've just seen the shift from supplying Coca-Cola branded product and soft drinks in their outlets to, they've done a national deal with Pepsi to supply Pepsi. You've also seen some issues around the company in terms of margins that franchisees make. And from my own perspective, I just thought out of interest, I'd buy a pizza a couple of weeks ago. And I was actually surprised at how small the pizzas have become in a further attempt by Domino's to increase margins to shareholders. So it gets to a point where you can't keep reducing the size of the pizza for it to be a serious value proposition for people looking to purchase. And there is talk, Deutsche Bank analysts put out a research report this week saying that there was rumours that pizza sizes were going to reduce again. So for us, it's very expensive, though they have delivered excellent results. It's trading on a PE of about 32 times now. It's going to be delivering about 35% if you look at 2018 consensus numbers, 35% growth in earnings. So it's still an excellent business, still growing. One of the rare Australian companies to demonstrate their ability to successfully manage a business offshore and produce good results. But for us, outside of our universe, if you did own the stock, I'd be looking at it now saying, look, I've had a fantastic return over a long period of time, but it's trading on a very expensive multiple, and it's priced to perfection. The business can't afford to make too many sort of hiccups from this level. For us, it's an opportunity to look back into the smaller and micro cap companies and find something else that can go from that $300 to $500 million market cap up to a $3 or $4 billion company. So it was an excellent business for us. It's not where we're looking now. We're looking at cheaper businesses, smaller, that have that very strong growth trajectory ahead of them. So there are our views on Domino's Pizza. Thanks for watching, and keep looking at our YouTube channel. Thank you.